How much will these trade talks actually hurt world growth in the next 4 to 6 months? And how difficult is it to measure that now?
So growth has weakened, has faded over the past over the past years or so, and it's now quite weak, as you say. There has been trade tension, and we really think that trade has derailed the global recovery that was going on in sync in 2017. Looking in the past, it's difficult to disentangle from the trade effect from what happened in Argentina, Turkey, or lower growth in China. But looking ahead, we can actually model what would happen if the trade tension were to continue.
What does it mean for what countries need to do? So if these trade tensions continue, do central banks have the tools to deal with it, or does it need to come from fiscal policy, Laurence?
Well, that's actually a very good point, because we also underline how much the global growth has still been on life support from monetary policy, and how important it is to consider the other tools that exist for policymakers, for governments, and that's fiscal policy and that's structural policy. So the one message we send for that, beyond the trade negotiation, is first, invest. Interest rates are at record low, and they're set to be persistently low. And on top of this, reform, competition, reform, regulation, the digital transformation that we're seeing really requires governments to act, and fast.
Laurence Boone, I want to rip up the script. Ambrose Evans-Pritchard at The Telegraph published seconds ago, and he talks about an EU financial policy that is, quote unquote, back to the ice age. How restrictive right now are central banks? How restrictive is financial policy when you see inflation coming in so low?
So I think I would distinguish two things from your question. The first one is monetary policy, which I think is hugely accommodative, but obviously with a flat yield curve, if the bank's business model is not as good as what it should be, it's a way on profit. That's one thing. And the remedy to that is to clean further NPL and modernize the business model. And the other thing is financial conditions are actually very accommodative. They started tighten at the end of the year. It's one of the reasons, as you know, why emerging markets, or some of them, took a hit, but they've loosened since then. I really think we should take advantage of this looser financial condition to actually invest more and talk about fiscal policy a lot more than what we do now.